You're at the altar, ready to say I do, but deep down, you know there's a ticking time bomb in your bank account. Let's talk about how financially to prepare for marriage and avoid turning happily ever after into financial disaster. Trust me, fellas, I have been there and I know how easy it is to overlook money talk when you're in love, but the cost of ignoring it can be so very steep. Welcome to FTP, financial trauma. This is the baggage many of us carry from our past experiences, whether it's debt, lack of savings, or bad money habits passed down from our families. If couples don't talk about their financial situation before marriage, these unresolved issues will come up eventually, and it's never pretty. Not talking about money is one of the biggest mistakes couples make. Studies show that financial issues are one of the leading causes of divorce. So, if you want your marriage to succeed, you've got to start communicating. You've got to start communicating about money now. And speaking of money, let's talk about weddings. Everyone wants a dream wedding, but let's be real, going into debt for a one-day celebration is not the greatest idea. I've seen it too many times that couples spend everything on the wedding, then spend years trying to literally dig themselves out of trouble financially afterwards. If you and your fiance don't have the money to throw an extravagant wedding, guys, don't be afraid to scale back. Don't be afraid to talk to her. What matters most is the life you're building together, not how much you spend on the big day. Look, maxing out your credit cards, spending your savings, and taking out personal loans just to fund your wedding will make you feel trapped like you're in a financial nightmare before you even start your marriage. You'll be walking down the aisle with a smile, but deep down, the weight of the debt will haunt every decision you make. Trust me, the honeymoon won't feel sweet when you're worrying about how to pay off the day you said, I do. Instead, focus on building a future that you can both thrive in, not just in the one-day celebration. So here are 5 ways to avoid the marriage money trap. Number 1, build an emergency fund together. So let's start with something that will keep you way better prepared. Building an emergency fund. This is your safety net, and it's one of the most important things that you can do together before getting married. So I had a friend who got married without thinking about what would happen if, something happened, life threw them a curveball, and they didn't have enough savings to cover their bills. They ended up maxing out credit cards, and the stress of it nearly tore them apart. Compare that to another couple who decided to prioritize saving up their emergency fund before they got married, so that when one of them lost their job, they had enough savings to cover the gap. And it gave them a peace of mind instead of panic. So you can start small, even if you're both working on paying off debt or saving for other goals. Put aside a small portion of your income into a separate savings account. Aim to save up to 3 to 6 months worth of savings expenses, but don't worry if you can't do it all at once. You should automate your savings so it happens consistently. Now, where you collect your money is just as important, so it has the potential to grow faster, like putting the money in a high yield savings account. There are also other vehicles that you can use to grow your money. Definitely seek a financial advisor to guide you with this. Number 2, have the debt conversation now, like right now. Now, let's talk about something that can either make or break your marriage. That is debt. If you're carrying debt into your marriage, whether it's student loans, credit card debt, or medical bills, it is absolutely crucial to have an open conversation about it with your fiance before you get married. I had a client who thought his debt wouldn't matter once they got married. 2 incomes basically for him meant this is better than 1, right? But once the bills started coming in, his wife felt blindsided. She didn't fully know the extent of his debt, and it created a serious tension in their relationship. They were always fighting about money because they didn't have a plan going into the marriage. So here's an approach that you can use. Schedule a time to sit down and create a debt inventory. That's writing down every debt that both of you have, including interest rates, monthly payments, and your balances. And you come up with a strategy that works for the both of you to tackle the high interest debt first. Consolidate your debts maybe into one monthly payment. Whatever works best for you, the point is that you both need to be on the same page. If you're feeling overwhelmed, consider working with a financial counselor to help you create a debt repayment plan. It's better to start your marriage with a clear plan than to let the debt be a silent killer in your relationship. Number 3, avoid going into debt for the wedding. So we just talked about this, but it is worth saying it again. Don't go into debt for your wedding. It's not worth it. Yes, weddings are definitely important. You want to celebrate your love and your big day, but going into debt just for that day sets you back for years. I knew a couple who went all out for their wedding. It was so beautiful, lavish venue, designer outfits, no expenses spared. They even took out personal loans and maxed out credit cards to make the whole beautiful day happen. 2 years later, they were still struggling to pay off that debt, and the financial strains started affecting their marriage. So, you need to set a budget for your wedding that doesn't break the bank. Prioritize what's most important to you and her. And then you do not need to spend $50,000 on a wedding to have a meaningful celebration. Look for creative ways to cut costs. Remember, the wedding is just one day, but your marriage is for life. Start your marriage with financial stability and not wedding debt. Number 4, understand each other's spending and saving habits. Look, this is a big one. So before you get married, you need to understand how each of you handles money. Do you both save? Does one of you like to spend more freely? So sit down with your partner and talk about your financial habits. Ask questions about, do you prefer to save or are you more into spending? What are your financial goals for the future? And basically, how would the both of you handle your big expenses? Would you have joint accounts, separate accounts, or a mixed account? Understanding this before you get married can save you from fights down the road. Number 5, protect your assets and plan for the future. If either of you has significant assets, whether it's a business, property, or investments, it's important to protect them legally before you get married. Prenups are definitely a personal decision that couples need to seriously talk about if they have assets going into their marriage. I know some people think that if you have a prenup, that means that somehow you really don't love the person or you just think about money. However, that's not my belief. So fellas, imagine if you owned a business before getting married. You know, the business was one that your family had passed down to you and you worked really hard in your business to make it successful. But you didn't think to protect it with a prenup. Unfortunately, your marriage ended in divorce. You lost half of your company and it was devastating to you. If you had set things up legally beforehand, it could have saved you a lot of pain. Now, prenups can be reversible. I know couples that have had their prenups null and voided later on in their marriage. Look, this is not about mistrust. It's about protection for the both of you. Talk to a financial planner or an attorney to make sure everything is set up the way it should be. And beyond that, remember that you are planning for the future, whether that's buying a house, starting a family, or saving for retirement. Make sure that both of you have life insurance in place, even if you don't have significant assets yet. Planning for the unexpected is a crucial part of financial stability. Listen, fellas, marriage is about building a life together, and finances are a huge part of that. If you can communicate, plan and work together on your finances before the wedding, you'll be setting yourself up for a huge success. What is your biggest financial challenge before tying the knot? I want you to drop it in the comments. I want to keep the conversation going. So, let me drop today's credit gem. If you're thinking about starting a business or expanding one, your personal credit can be a powerful tool to leverage. So many lenders look at your personal credit when you apply for business loans or credit lines, especially if your business is new or it doesn't have established business credit history. When your personal credit score is strong, think around 700 and above, you're more likely to get approved for business credit cards and loans with better terms. This means lower interest rates, higher credit limits, and more flexibility to grow your business without worrying about cash flow. But here's the catch. Just because you're using personal credit to get business credit doesn't mean you should mix personal and business expenses. Keep them separate to avoid tax headaches and financial confusion. If you want to know more, click the link in the description that says Business Funding Blueprint. And remember, you are your greatest value. You are your greatest asset. Take care.